This is a peak week for earnings. This morning we heard from Air Canada. Our guest recently sold the stock. Joining us now, Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. Brianne, great to see you. Talk to us about Air Canada. You actually got out of the stock fairly recently.
Yeah, thanks for having me as always, Andy. Yeah, we have some big earnings on deck this week, and even today alone, you're going to see some big names: Procter & Gamble, Merck, Visa. Tomorrow, some of the Mag 7 we're getting as well. And yeah, Air Canada is a stock that we did see, a little bit of, I think, recovery made post-pandemic, right? We saw strong demand for international travel, a little bit better cost-cutting control that has offset some of their lingering headwinds in kind of the domestic transborder markets. Has been still an extremely volatile stock, as you can see there, even over the past 5 years. Earnings per share, we are expecting to see a little bit of a drop down from last year, below expectation. Revenue up slightly again, but we don't think that growth is going to be enough to offset the softer demand on the U.S. routes. And I think a lot of people, have been, especially Canadians, have been reducing their travel to the U.S. So a little bit of drag from U.S. travel, and we see that weakness continued to be offset a little bit in the cargo as well. So again, from a valuation and fundamental, we just don't see the upside potential to be the risk reward anymore.
UnitedHealth, that stock down in the pre-market, yet more troubles for this giant U.S. health insurer. Hello, maybe Brianne, we might have had Brianne's signal freeze there. There is a look at UnitedHealth over the past year, and you can see it's lost half of its value. They have come back with their profit forecast. However, it's not impressing investors. It suspended the profit outlook months ago, but has come up with a new set of projections. And Reuters warning it highlights the challenges this giant insurer faces, including rising medical costs. It now is looking for full-year earnings per share of at least $16, but that's well short of analysts' already cut expectations and second quarter missed consensus. So there is UnitedHealth. Not sure if we can look at it in the pre-market, but for a supposedly defensive stock, it has been a major letdown for investors over the past, it's getting on for a year now. I'm just looking at the stock in the pre-market and down another 5%. So that has not been a great story. We're also going to be looking at Visa, of course, today. That is the stock that Brianne owns. And let's have a look at Visa. Look at how it's been sidelining or moving sideways over the past few weeks. One of the concerns is the impact of crypto innovation, stablecoins, and possibly new forms of payment, challenging Visa's grip on the world's financial systems. And one other stock we're going to be talking about, Brianne, also. Okay, we're back to Brianne. Brianne, thank you very much. Sorry about that technical glitch. Any thoughts on UnitedHealth? Yet another disappointment for investors today, it seems.
Yeah, I think UnitedHealth has been, yes, longer term, long, steady name in the healthcare space, but it has hit a lot of turbulence this year. I think rising medical costs, regulatory pressure, changes in kind of the Medicare payments we see are, have weighed on the story, though, the scale and track record still stands out. Yes, expectations are low. I think the healthcare services arm is under pressure, but investors want clear numbers, and that's what we want to see. Last year, a big chunk of profits, over $3 billion, came from selling businesses, not from their day-to-day operations. So we think valuations is already pricing in the pain. I think at 15 times earnings, shares are nearly, at the bottom. And if the narrative stabilizes, there could be room for a re-rating out of UnitedHealth.